Hello, it's Forex News for Thursday, November 18th, provided to you by InstaForex News team and me, Darika Isakova. Narrowing of the external trade deficit appeared to be almost the only positive point in the U.S. recession. However, despite a considerable easing of domestic demand, the trade deficit downturn seen during this economic fall was rather short. There are some reasons, such as China and production cut back in the manufacturing industry. As a result, the trade sector is unlikely to back up the economy. But some progress was observed. The American external trade deficit contracted from almost $65 billion in July of 2008 to $26.38 billion in May of 2009. Nevertheless, the indicator dynamics improves much faster. In the period of moderate recession from 1990 to 1991 in the USA had been recorded the external trade surplus for a small time. Since summer, the deficit had increased. In accordance with the data released on Friday, the external trade deficit of the USA ticked up to $36.47 billion in September. That was partly due to oil import enlargement and the fact that import was zooming faster than export. Higher deficit of the external trade signals that the gross domestic product increase was closer to annual 3% rate in the third quarter, with the initial growth estimate of 3.5%. The deficit worsening in the USA can extend. On Friday, the Chinese Commerce Minister said that he relies on export upsurge from China in 2010. This would mean a delivery expansion to the United States, one of the major trading partners of China. Besides, China didn't manage to brace up its national currency against the US dollar. That made a lot of imported goods more expensive. On the back of it, from October to September, the Chinese import fell by 15.6%, while the American import dropped by 22.1%. The trade deficit of the USA and China did not reduce essentially as the general deficit of the US external trade. The import advancement won't be a negative sign. It will show the home demand uprise if the USA can wait for the export increase. The problem is in the productivity slowdown in the USA, so even if the export moves up due to the dollar lowering and the global economy revival, this boost won't be enough to neutralize the import upturn, and it follows that the external trade deficit would widen. We will be back tomorrow with the next release. Goodbye.